We explain in this video every way to invest your money. Explained. Most people think investing is risky, but not investing is actually riskier. Because every single day, your money is quietly losing value. Not because you spent it, not because you wasted it, but because inflation is working against you. Money that just sits still is money that slowly disappears. And here's the uncomfortable truth. Most people don't lose money by making bad investments. They lose money by never understanding their options. So today, we are going to break this down calmly, clearly, and step by step. No hype, no complicated words, no fake promises. Just every major way people invest their money, from the safest options to the riskiest ones, and more importantly, who each one is actually for. Because the goal of investing is not to get rich overnight. The goal is to survive financially and slowly move forward. Let's start at the very bottom, the place almost everyone begins: saving money. A savings account is the simplest place to keep your money. It feels safe, it feels responsible, it feels smart. Your money is protected, you can access it easily, and there's almost no risk. But there's a problem. The interest you earn is usually lower than inflation, which means even though the number in your account goes up, the real value goes down. Savings accounts are not investments. They are parking spaces. They're good for emergencies. They're good for short-term needs, but they do not build wealth. Next comes fixed deposits or term deposits. Here, you lock your money for a fixed time. In return, you get a fixed return. It's predictable, it's stable, and it feels reassuring. But again, the returns are limited. After taxes and inflation, the real growth is often very small. This is not how money grows fast. This is how money stays alive. Then we move to bonds. Bonds are loans. When you buy a bond, you're lending money to a government or a company. They promise to pay you interest and return your money later. Government bonds are usually very safe. Corporate bonds pay more but carry more risk. Bonds are popular with people who want stability. They reduce volatility, they reduce stress, but they also limit upside. Bonds protect wealth. They rarely create it. Now we enter the world most people are afraid of: stocks. When you buy a stock, you're buying ownership in a company. Not a lottery ticket, not a gamble. Actual ownership. If the company grows, your investment grows. If it fails, your investment suffers. This is where real wealth has historically been created, but this is also where emotions destroy people. Because stock prices move every day, up, down, sideways, and beginners panic. They buy when prices are high, they sell when prices crash. Not because the business changed, but because fear took over. This is why most people underperform the market, not because investing doesn't work, but because psychology gets in the way. That's where index funds come in. An index fund buys hundreds or thousands of companies at once. Instead of betting on one winner, you bet on the entire economy. If some companies fail, others succeed. Over long periods, this strategy has beaten most professionals. It's boring, it's slow, and it works. Exchange-traded funds, or ETFs, work in a similar way. They track indexes, sectors, or themes. They're flexible, they're transparent, and they're beginner-friendly. For most people, this is the core of smart investing. Next comes mutual funds. Mutual funds pool money from many investors and are managed by professionals. Some perform well, many do not. Fees matter here because high fees eat into returns over time. A small percentage difference over decades can mean losing huge amounts of money. Always remember this. Returns matter, but costs matter more than you think. Now let's talk about real estate. Property is one of the oldest investment tools in history. You can earn rental income, you can benefit from appreciation. But real estate is not passive. There are repairs, taxes, vacancies, legal issues, and prices don't always go up. Real estate can be powerful, but it requires capital, patience, and management. It's not for everyone. Then there are businesses. Starting or buying a business is one of the highest risk and highest reward investments. Most businesses fail, but the ones that succeed can change lives. This is not passive income. This is work, stress, decision-making. But for some people, this is where true wealth is created. Next are commodities: gold, silver, oil. Commodities are stores of value. They protect against inflation. They protect against currency collapse, but they do not produce income. Gold doesn't grow, it preserves. Commodities are insurance, not engines of growth. Now we reach the most misunderstood area: cryptocurrency. Crypto is volatile, extremely volatile. Massive gains, massive crashes. Some people became rich, many lost everything. Crypto is speculation. It is not the foundation of a financial plan. If used, it should be a small part, not the core. Now here's where everything connects: risk and reward. Every investment exists on a spectrum. Low risk usually means low reward. High reward usually means high risk. There's no magic option that gives both without trade-offs. Smart investing is about balance. It's about time horizon. If you need money soon, you can't take big risks. If you have decades, volatility becomes your friend. Diversification matters. Not all money should be in one place. Different assets behave differently in different situations. And now, the biggest mistake of all: doing nothing. Keeping money in cash forever feels safe, but inflation guarantees loss. Slow, quiet, invisible loss. Time rewards those who start early, even with small amounts. Consistency beats timing. Understanding beats luck. You don't need perfect choices. You need reasonable ones, held for a long time. Investing is not about being smart. It's about being patient. It's about controlling emotions. It's about understanding what you own and why you own it. The best investment is not the riskiest, and it's not the safest. It's the one you understand and can stick with when things get uncomfortable. If you learned even one thing today, that means you're already ahead of most people, because clarity is the first step to progress, and knowledge is the best investment you can make. If you like this video, subscribe my channel for more informative video. Thank you.